Hello everyone, welcome back to Stock Market Meridian. Today is 24th August 2026 and you're watching today's post-market report. Let's begin with today's market performance. The Indian market opened with a slight gap up but remained under selling pressure throughout the session and finally closed in the negative zone. Sector-wise, PSU Banks and Media were the top losers, while Metal and Realty sectors were among the top gainers. Now let's quickly move on to today's top news and important market updates. Indian banks raise billions through overseas debt. Have you wondered why major Indian banks are aggressively raising funds from international markets? Over the past few days, HDFC Bank, ICICI Bank and Axis Bank have tapped global debt markets to raise billions of dollars. ICICI Bank raised around $2.05 billion, including a fresh $750 million 5-year bond, while HDFC Bank raised $1.75 billion through 3- and 5-year bonds. The main reason is the pressure on domestic deposits. For example, HDFC Bank's low-cost CASA ratio fell from 38% in September 2023 to 32% in June 2026. Dollar-denominated bonds provide banks with stable, long-term funding, which can be used to finance exporters, importers, and overseas Indian businesses. However, these funds are not cheap. HDFC Bank's 3-year and 5-year bonds were priced at spreads of 88 and 100 basis points above US Treasuries. Still, investor demand was extremely strong, with HDFC Bank's $1.75 billion issue receiving nearly $7 billion in bids. The RBI has also opened a special dollar-rupee swap facility until December 31, 2026, with a fixed annual premium of 1.5%. So, raising money is only the first step. The real benefit will depend on interest margins, hedging costs, and credit quality. Gold rally lifts jewelry and gold loan stocks. Next, a sharp rise in domestic and global gold prices has triggered a rally across jewelry stocks. On MCX, October gold contracts rose around 908 rupees to 1,63,346 rupees per 10 grams, supported by a weaker US dollar and positive global cues. Higher gold prices are supporting jewelry retailers ahead of the festive and wedding season. Consumers are also adapting by shifting towards lightweight jewelry, coins, and lower ticket purchases. But the bigger story is happening in gold-backed financial products. Gold loans accounted for 41% of retail credit disbursements in FY26 compared with just 18% in FY23. Gold loans currently represent around 5% of total system credit, and this could potentially reach 10% over the next 5 years. Borrowers can save around 300 to 600 basis points compared with unsecured personal loans, while lenders get the benefit of collateral-backed lending. JP Morgan has also initiated coverage with an overweight rating on Muthoot Finance, Mallappuram Finance and IIFL Finance. Sugar stocks rally on supply measures. Moving ahead, sugar stocks surged sharply today, with several companies hitting fresh 52-week highs. The rally came after the government tightened sugar stock holding limits to control domestic prices. Bajaj Hindustan Sugar surged more than 12%, while several other sugar companies also touched fresh highs. Stocks such as Sri Renuka Sugars, EID Parry, Balrampur Chini Mills, and Triveni Engineering gained between 3% and 8%. The government has imposed a 400-ton stock holding limit on sugar dealers from August 1st to November 30th. Bulk consumers will also be restricted to holding only 15 days of consumption stock from September 1st. At the same time, the government has allowed duty-free imports of 1 million tons of raw sugar to meet festival season demand. The combination of firm sugar prices, controlled inventories, and strong festive demand has triggered strong buying interest across the sector. The positive momentum also spilled into rice and dairy stocks. KRBL, LT Foods, and Chaman Lal Sethia gained as much as 14%. KRBL expects rice prices to remain firm because of tighter crop sizes and strong festive demand. Meanwhile, LT Foods reported 28% revenue growth and a 33% year-on-year EBITDA increase, with margins expanding to 11.2%. Brokerages maintained positive views on the company, with target prices of around 520 rupees and 514 rupees. In dairy stocks, Parag Milk Foods and Hudson Agro gained around 6% and 5.4% respectively. Milky Mist Dairy Food also rose around 3.5%, supported by strong demand for paneer, curd, cheese and ghee. Moving ahead, the Godrej Industries Group has signed an MOU with the Haryana government for a massive 20,000 crore rupees investment plan. Out of this, Godrej Properties plans to invest 16,000 crore rupees by FY28, expanding its projects across Gurugram, Sonipat, Faridabad, Panipat and Kurukshetra. Another 3,500 crore rupees is planned for Grade A+ office infrastructure in Gurugram. The investment could create up to 40,000 direct and indirect jobs. Godrej Group has already invested around 12,000 crore rupees in Haryana and currently employs approximately 9,000 people in the state. The announcement highlights the group's confidence in Haryana's rapid urbanization and Gurugram's position as a major commercial hub. Now, an important development in the IT sector. Hexaware Technologies rallied nearly 6% after unveiling a major AI strategy at its analyst meet. The company sees a potential $300 billion plus addressable market across AI data readiness, legacy modernization, cybersecurity, and services as software. Management expects traditional IT services to face 20% to 25% gross deflation over the next 4 years. To counter this, Hexaware plans to launch one new AI service every month. The company also introduced Zerovity, an AI delivery layer designed to reduce migration challenges, modernize code, lower SaaS costs, and reduce technology debt. More than 50% of Hexaware's current revenue is already AI-infused, while around 5% is AI-native. Despite being down more than 24% year-to-date, the stock has recovered around 4% over the past month. Next, Vodafone Idea has moved closer to securing crucial bank debt after State Bank of India approved its share of the proposed consortium loan. However, actual disbursement remains conditional. Private sector lenders are demanding stronger promoter guarantees and letters of comfort before committing their portion. Y is targeting a massive 45,000 crore 3-year capex plan for network expansion and 5G deployment. The company has already raised 6,400 crore and placed around 9,000 crore of equipment orders with Nokia, Ericsson and Samsung. The debt package is being pursued through PSU banks, private banks and foreign lenders. The key issue now is whether Vodafone Idea can secure sufficient guarantees and complete the remaining debt commitments. Next, Piramal Finance is strengthening its capital base through promoter support. The board approved the issue of up to 82.94 lakh convertible warrants worth approximately 1,750 crore rupees to promoter group entity Nityam Realty. The warrants are priced at 2,110 rupees each, with 25% payable upfront and the remaining 75% upon conversion. If fully converted, Nityam Realty would hold around 3.53% of the company on a fully diluted basis. The funds are expected to support business expansion, balance sheet strengthening, and retail lending growth across housing and MSME finance. Shareholder approval will be sought at an EGM on September 19, 2026. Moving to the defense sector, Garden Reach Shipbuilders and Engineers or GRSE has committed 2,670 crore rupees to expand its shipbuilding capacity. More than 2,500 crore rupees will be invested in a new shipbuilding facility at Raichak, West Bengal. The facility will include a 200-meter dry dock, allowing GRSE to build larger warships and commercial vessels. Another 100 crore rupees will be used to modernize the Shalimar facility, while around 70 crore rupees will go towards upgrading the Kidarpur unit. The expansion will help GRSE handle larger orders from the Indian Navy, Coast Guard and export markets, while strengthening India's domestic shipbuilding capabilities. Next, Tata Power Renewable Energy has commissioned a 190.5 megawatt solar FDRE project at Kalasar in Bikaner, Rajasthan. The project includes a 115 megawatt hour battery energy storage system along with advanced grid management equipment. Power generated will be supplied to MSEDCL, HPPC and Noida Power Company. With this project, Tata Power's renewable utility capacity has reached 12.4 gigawatt, including 6.9 gigawatt operational capacity. The company has another 5.5 gigawatt under implementation over the next 24 months. This strengthens Tata Power's renewable energy portfolio and supports its long-term net zero 2045 target. Now, an important regulatory update related to the SEBI JP Morgan market manipulation case that we discussed earlier. SEBI recently barred Copthall Mauritius Investment, a JP Morgan entity, over alleged manipulation during the newly introduced closing auction session. The entity is expected to argue that the order execution discrepancies were technical rather than intentional manipulation. It is currently seeking clarification from SEBI during the 21-day response window rather than immediately launching an appeal. Importantly, Copthall Mauritius is legally separate from JP Morgan India, so JP Morgan's domestic banking and advisory operations remain unaffected. SEBI alleged that Copthall Mauritius and Mansi Share carried out manipulative trades during the closing auction session on August 13th, influencing the indicative equilibrium price and benefiting from index options. SEBI ordered the impounding of approximately 3.67 crore rupees in alleged unlawful gains across both entities. This is significant because it represents one of the first major enforcement actions under India's new closing auction session mechanism. Next, Vishal Megamart shares surged nearly 12% after the company announced the reappointment of Guninder Kapoor as Managing Director and CEO for another 5-year term. His new term will run from September 1, 2026 to August 31, 2031, subject to shareholder approval. Kapoor has been instrumental in the company's growth since 2011, particularly in Tier 2 and Tier 3 markets. The company's private label brands contribute around 75% of total sales, supporting strong margins. Analysts believe leadership continuity removes a key person risk, although the stock's elevated valuation remains a concern. Next, Indian Hotels Company or IHIL and Oriental Hotels have approved a scheme of arrangement to merge Oriental Hotels into IHIL through an all-stock transaction. Under the deal, Oriental Hotels shareholders will receive 25 IHIL shares for every 117 Oriental Hotels shares. Around 2.32 crore new IHIL shares will be issued, resulting in approximately 1.6% equity dilution. IHIL already owns around 37.05% of Oriental Hotels. The merger is targeted for completion by FY28, subject to regulatory and shareholder approvals. Following the announcement, Oriental Hotels surged around 6%, while IHIL initially declined before recovering. The merger will bring 7 operational hotels and 825 rooms fully under IHCL, strengthening its presence across southern India. Next, Segal India, in a joint venture with Sushi Infra and Mining, has won a 704.70 crore EPC order from the Ministry of Road Transport and Highways. Segal holds a 74% share, while Sushi Infra holds 26%. The project involves construction of the Lada-Sarli section of NH 913 Frontier Highway in Arunachal Pradesh. The construction period is 48 months, followed by a 5-year maintenance period. The project strengthens strategic border connectivity in the northeastern region and adds long-term revenue visibility to Segal's EPC order book. Moving ahead, TVS Supply Chain Solutions has signed an MOU with Japan-based logistics and engineering company Sankyu Inc. As part of the agreement, Sankyu intends to acquire a 0.5% stake in TVS Supply Chain subject to regulatory approvals. The partnership will initially focus on Japanese manufacturing companies operating in India. And this is a large potential market, with more than 1,400 Japanese companies operating in India. The two companies will combine TVS SCS's logistics network with Sankyu's engineering and plant support capabilities. The partnership could eventually expand across Asia, the Middle East, and Africa. And finally, Ratnamani Metals and Tubes has secured approximately 2,700 crore worth of export orders through its specialized subsidiary. The orders cover industrial spools and hangers for international customers and will be executed over 2 to 3 years. With Ratnamani's market cap around 19,000 crore, the order value is equivalent to nearly 14% of its market capitalization. The deal provides strong multi-year revenue visibility and further expands the company's international footprint. So, that's all for today's post-market report. If you found this analysis useful, make sure to like this video, share it with your fellow investors, and subscribe to Stock Market Meridian. I'll be back tomorrow morning with another detailed pre-market report covering global markets, important developments, commodities, and the key factors that could influence the Indian market before the opening bell. Until then, signing off, Jai Hind.